Here's the simple breakdown for this trade, guys. As soon as the market opened, the first thing we did was we went higher. We came higher and we took out this external liquidity right here. These highs right here that previously swept these Asian session highs, that's what we came for. And as soon as we swept that liquidity right there, you can see the market sells off to the downside. And basically we had London lows down here and we had Asian lows. Now, this area is very important. I'm going to zoom out here and I want you guys to see here, we have previous day highs sitting up here. So when the market first came higher, once we first opened and the market came higher, we failed to sweep previous day highs and we left this high right here, creating relative equal highs. There weren't directly equal highs, but they're relative equal highs. They're very close to each other. And that previous day highs also is Asian session highs as well. So that was a nice liquidity point for us to target if we were looking to take the market higher. So as soon as the market ran away from these highs right here, we knew that the next area that the market was going to come for was London session lows and Asian session lows, which were down here. So we waited for the market to reach Asian session and London session lows. Okay, as soon as the market got here, you guys can see we have this strong candle towards the downside, right? We have this strong candle to the downside, and that's 10 a.m. news. Okay, that is 10 a.m. news right there, that strong candle to the downside. And you guys know when the market is sweeping liquidity, in order for us to change, in order for us to look for a change in order flow, we need to see inversion or maybe a CISD, whichever one you guys want to use. So once the market came to this liquidity point, what I'm hearing I'm looking for is the market going to respect this little liquidity point and trade away from this liquidity point? Or are we going to disrespect this and target more sell side liquidity? And you guys can see here, I am on the 5-minute time frame. I'm on the 5-minute time frame. And look what you see. Inside of this candle right here, you see an obvious 5-minute bearish fair value gap. This 5-minute fair value gap is going to determine whether we are going to continue selling lower or whether we inverse this and we go higher. So what I'm waiting for is I want to see how the market reacts inside this fair value gap. The first thing I seen here was that we respected this 5-minute and we traded away. We traded away and we ended up going lower, sweeping these lows. And look at this closure right here. Look at this candle. This wick right here is what kind of gave me an early confirmation that we were potentially going higher. You can see the market swept this liquidity and then we came lower and we swept data lows right here. We swept data lows. So the main thing I'm looking for is, since this was a previously respected 5-minute bearish fair value gap, if the market were to inverse that and disrespect this, then I know that buyers are taking over at this price point and that we want to go higher. Okay, so that's what we was waiting for. We was waiting for the inversion of this 5-minute bearish gap. Once that happened, we executed our trade up here, stop loss underneath, right underneath that gap. And we were targeting the previous daily highs. Okay. As soon as we confirmed that the market was respecting the Asian session lows and London session low sweep, and we got the confirmation right here with this inversion, we knew that the next liquidity target was going to be buy side liquidity, which is these previous day highs that the market engineered more liquidity than that we left over.